Ethereum just broke a level it hasn't touched in more than a year and a half, and it looks like we are at the brink of one of the biggest rotations we've seen all cycle. And guys, when this rotation starts, because it's here, it's literally happening right now. Certain large caps tend to move first. That's the order of events. In today's show, and happy Monday, by the way, today I'll be breaking down Ethereum's breakout, why Bitcoin dominance is flashing a rare signal, and exactly how to position yourself for what could turn into a full-blown crypto supercycle, as I believe it is. We are also going to be taking a look at two key large caps. One of them is making crypto onboarding so simple, it feels like you're literally just unlocking your phone. And the other is creating a direct on-chain link between real-world adoption and token demand. And by the end of today's show, I've also got an Ethereum beta play that could run even harder when things heat up. So it's a jam-packed show today, guys. So much to get into, so let's get started. So let's start off by looking at Ethereum. Right now, we see fresh capital continuing to move into the market, and Ethereum is showing some of the clearest, forceful momentum. After spending more than a year and a half capped under the $4,000 mark, ETH has now broken through. This breakthrough has secured Ethereum's highest weekly close since the 2021 bull market peak, and it also stands as the third highest weekly close in all of its history. And the next hurdle could be the most explosive. Not to overuse the word, but that's literally the best word to use here. And what's very interesting is that right around the $4,300 mark sits roughly $1 billion worth of short positions, people betting against Ethereum going higher. If the market pushes through that level, it could trigger a liquidation cascade of all those shorts, forcing shorts to buy back, which will then, of course, accelerate the move upward. And the fundamentals for this setup could not be stronger. Market structure backs this breakout. Open interest, the total number of active futures contracts, is sitting at record highs, while funding rates remain stable. This suggests strong participation without extreme leverage risk. Spot market demand is also very clear. ETH ETFs have already brought in over $9.8 billion in net inflows since launch, with some of the largest days happening just last week. And on top of all of this, Ethereum's net capital change has recently overtaken Bitcoin's, providing one of the strongest signals yet that altcoin season is heating up. And this brings us to something extremely important to understand for all of us in order to know how to navigate these crypto cycles. And that is understanding where Bitcoin dominance stands right now and why it matters for what happens next. Bitcoin dominance, we know, is the percentage of the total crypto market cap held in Bitcoin. It has been sitting above its key 50-week simple moving average for more than 2.5 years. This line has acted as a dividing point in every cycle. And history shows that when dominance finally slips below it, the market behavior shifts very fast. And one of the clearest relationships, I would say, to watch for is with Ethereum. When dominance trends low, it means ETH tends to accelerate, often kicking off those periods when capital starts spreading into altcoins and retail frenzy builds. If we see a weekly close in the 59% range or lower, it would mark the first sustained downtrend in dominance in over 2 years. A setup that's historically led to rapid capital rotation from Bitcoin into ETH and then the broader altcoin market. And what makes this moment especially interesting is that retail attention is still quiet. YouTube crypto metrics, for instance, are still down about 75% from their all-time highs in both views and new subscribers. And charts tracking hundreds of top creators show engagements are still far below bull market peaks. All this means the kind of mass FOMO we usually see during an altcoin run hasn't even started yet, which tells us there's a lot more room to go and that the market is only going to get crazier and more exciting. To top all of this up, none of the major cycle top indicators are anywhere close to flashing red. Out of the 30 different bull market peak models, not a single one has hit yet. So this suggests there's still plenty of runway for capital to rotate aggressively into altcoins before the market reaches exhaustion and fizzles out. So it's important to remember that this rotation doesn't happen all at once. Capital flows through the market in phases, and that's what I always try to explain to you in my videos. It starts with Bitcoin, then it moves into Ethereum, and then from there the overflow flows into large caps and eventually mid caps, and then low caps, and then micro caps. And this is when you see everything pumping. Right now, the market setup suggests we're entering into phase 2, the rotation towards Ethereum. This makes this time right now prime time to start identifying strong large caps before they enter the spotlight. Because when they enter the spotlight, it's too late. So I'm going to give you a quick little update on 2 of my favorite large cap altcoins. And we've covered these in past shows. And then, of course, as I said, towards the end of the video, I'm going to cover an Ethereum beta play, meaning it has a lot more room to pump because its market cap is not that big. Okay, so stay tuned for that. That's towards the end. And then, of course, guys, if you want a dedicated video on one of my top 5 large caps for this cycle, just let me know in the comments and I would love to put that together for you. And just a final word before we dive into these projects, remember one key principle: bull runs thrive on fresh money from serious players. Right now, major institutions, they're stepping up in a big way. Harvard's endowment has taken a position worth roughly $116 million in BlackRock's iShare Bitcoin ETFs, known as IBIT. That puts Bitcoin amongst its top holdings, right alongside giants like Microsoft, Amazon, and Meta. And on the global stage, every G20 nation is now also exploring the idea of adding Bitcoin to their own national reserves. And in the public markets, the top 100 listed companies collectively hold close to 1 million Bitcoin, held by Strategy, of course, Michael Saylor's company, Marathon, and Tesla. The scale of these moves are staggering. Bitcoin's market cap has overtaken that of Amazon's, while Ethereum's is now larger than MasterCard's. These are milestones in the general financial world, recognized by the entire investment world. And in the States, in the US, policy shifts are unlocking a floodgate of potential inflows as well. A recent executive order, which I went into in detail in last week's videos, I think it was Thursday or Friday, and that is a recent executive order gives over 90 million American workers the ability to allocate part of their 401k retirement savings plans into crypto. Put that into perspective, 401k plans represent about $12 trillion in assets, with roughly 50 billion flowing in every 2 weeks. Even just 1% of that moving into the crypto world means about $120 billion in fresh inflows, fresh capital. At 3%, you're talking about 360 billion. And if we push it to 5%, okay, it's roughly 600 billion. And this isn't a one-time payment. Once those allocations are set, the buying happens automatically every 2 weeks. This isn't just a Bitcoin story anymore either. Corporate treasuries are diversifying into multiple assets. Digital asset treasuries now track 14 different crypto tokens, with more than 110 companies holding Bitcoin, 10 holding Ethereum, 5 holding Sol, and 3 holding Sui, and others branching into XRP, DAO, and more. So now that we've seen Harvard moving into Bitcoin, Ethereum gaining strength, overtaking MasterCard, and policymakers opening the doors for crypto, it's the perfect time to look at these fundamentally strong large cap projects and tokens that are already adding value to the space and to the world, and have the potential to shine in this final stretch of the bull run. Now, just quickly here, I want to say, you know, if you've been following me, I don't cover garbage tokens. I cover only the best. And even if I do cover, say, Bonk, right, in the meme coin category, I cover it fundamentally. I will share the risks with you. I will share the whole picture because I want you to be fully informed. And I literally never, never, ever want to be ever accused of just pumping random tokens. That's not what you're going to get here. If you just want to hear any token, you know, that's pumping, or you could, you know, whatever, like, that's, go follow other people. That's not what you're getting here. So anyway, the first large cap we're following is, can I get a drum roll? Sui. They've just pushed out one of the most user-friendly upgrades I've seen in crypto. Passkey login is now live on mainnet, allowing for signups and logins through Face ID, Touch ID, or even a YubiKey. Now, of course, that also holds its own risk because you don't know how the governments of the future or even our current governments are going to use all this information. But this is where doing a deep dive into this could be good if this is what you're interested in, because it's all about the way this information is stored and protected by the company using this technology. So let me know if you want me to go into more detail here. But regarding the ease of use, it's pretty awesome because it's the same passwordless system people already trust with Apple or Google accounts. So it makes bringing in new people and onboarding them into crypto so much easier, which of course is going to be very good for our Sui crypto token holdings, because if more people join, then the price goes up. Right? Anyway, this is pretty awesome because this move removes one of the biggest pain points for everyday users. Creating a wallet takes seconds, and all the intimidating crypto setup steps are now gone because it's built on Web Authenticator, the global standard for passwordless authentication. The process feels second nature to anyone who's used a smartphone before. And the timing is impeccable too. It's not accidental. With their Sui Play OX1, a handheld Web3 gaming console built to run Sui-powered games, which is set to launch in just a couple of weeks. It's actually very cool. A few months ago in Dubai at Token 2049, they had one on the exhibition floor at one of the Sui events, and I got to interact with it. So very, very, very cool. Anyway, Sui's also started to make its presence felt in the corporate treasury world. Public companies are now adding Sui to their holdings, including significant allocations like Mill City's more than 76 million Sui position. Moves like this signal real institutional and enterprise interest, the kind that can help a project break beyond the crypto native crowd, which is what we need in order for a project to go mainstream. And on the enterprise side, they're securing large-scale holders who can integrate and use the token in meaningful ways. Combining a frictionless UX, right, the user interface, with credible institutional positioning is exactly how a strong layer one can evolve into a leader in the next adoption cycle. Next up is an altcoin I call a sleeping giant. And if you've been following my channel for some time, you would know I've covered it in full detail before, including a full ecosystem deep dive. Anyway, when it comes to projects that are both enterprise ready and positioned for mass adoption, Chainlink sits near the top. It's the critical infrastructure layer connecting blockchains with real-world data. And it's already woven into systems used by global banks. It already has mass global adoption. It's integrated with asset managers and major enterprise platforms. And their newest initiative is the Chainlink Reserve that takes that core utility and ties it directly to Link in a way that's easy to explain. It's a strategic on-chain reserve of Link, funded by revenue from both on-chain and off-chain clients using their payment abstraction framework. Clients can pay in fiat, right? Regular dollars. They can pay in stablecoins like USDT and USDC, or they can pay in crypto. And the system automatically converts those payments into Link from the open market. The purchased Link then moves into the reserve where it's locked away for years. This creates both a clear on-chain signal of adoption and a powerful feedback loop. As more services use Chainlink, more revenue flows into the reserve. Those deposits reduce the perceived liquid supply of Link, which can fuel buying interest. Price increases then make the reserve more valuable, which in turn amplifies the perception of scarcity, which increases the value. And over time, this turns into a loop. Okay. More adoption brings in more revenue, which grows the reserve, makes the supply feel tighter, and pushes the price higher. Then that momentum feeds right back into for even more demand, and then it's rinse, wash, repeat. This is the kind of setup I look for. A foundational infrastructure provider with strong ties to traditional finance, a growing pipeline of enterprise partners, and now a direct, transparent mechanism that links real-world growth to the token value itself. Pretty awesome, huh? And now, if we want to surf the Ethereum momentum, okay, let's zoom in there. Here's a token that usually runs harder than Ethereum when ETH starts moving. Pendle is what traders call a beta play. It tends to amplify Ethereum's price moves, running faster on the way up because it's deeply tied to the same DeFi ecosystem, but with a smaller market cap and more torque to growth narratives. At its core, Pendle is like a stock market, but instead of trading shares of companies, you're trading future yield from crypto assets. Think of it like this. Say you had $1,000 in a savings account earning interest. Pendle over here lets you split that into two parts: the $1,000 principal and the future interest it will earn. And then you get to trade them separately. That means you can lock in your yield now and speculate on future interest rates or buy discounted yield from someone else. Over the past few weeks, Pendle's total value locked, or its TVL, exploded to a record $8.3 billion, powered by the launch of Boros, a yield trading platform that turns funding rates into tradable yield units. In traditional finance, interest rates derivatives are a market worth hundreds of trillions of dollars. And Pendle is bringing that concept fully on-chain. The integrations are where the momentum really kicks in. A couple of days ago, their recent partnership with Athena's USDE unlocked looping strategies for boosted yields, triggering a 22% one-day rally. Whales are also taking notice. BitMEX co-founder Arthur Hayes just picked up 92,000 Pendle, worth roughly $500,000. Pendle is also lowering the barrier to entry. Alchemy Pay now supports Pendle purchase through Apple Pay, Google Pay, Visa, and MasterCard, making it simple for anyone to go from fiat, traditional money, to complex DeFi strategies in minutes. With deep Ethereum alignment, surging adoption, and a clear path to scaling in one of finance's largest untapped markets, Pendle has positioned itself as one of the most compelling plays for the next leg of the DeFi cycle. So, okay, guys, as we wrap up today's video, we know and we covered that Pendle's momentum right now is part of a much larger picture. We also saw that the signs we're seeing across the market point to what many call a crypto supercycle, which is a moment where capital keeps rotating, okay? Adoption keeps expanding and the cycle just keeps pushing forward. We've also talked about how Ethereum is breaking out after more than a year and a half, locking in one of its highest weekly closes in history and pulling in billions through its ETFs. We've also looked at Sui, making wallets as easy as Face ID unlocking is, and how it's already showing up on corporate balance sheets with positions in the tens of the millions of dollars. And we've also seen how Chainlink is creating a direct on-chain link between enterprise adoption and token demand through its new reserve system. And then, of course, Pendle brings a massive traditional finance market fully on-chain, hitting record TVL and growing its integrations every week. The moment we've all been waiting for is here. This is the time to go deeper into research, to keep an eye on the macro picture and find the projects with the highest potential for the next leg up, for the next pump in the market. And that's exactly what we do here at my channel. We break down the narratives. I have a fantastic team I love so much that helps me prepare all of this so I can bring it to you so that we can break down the most important moves in the market and the projects that could define this cycle. So if you found value in this video, I just ask you like the video and then share it with a friend or family member so we can spread the word and educate everybody so everyone can make money and literally everyone can win and transform their finances this bull run or take it to the next level. And then of course, as I said, I have a whole video dedicated to Chainlink and its ecosystem. And if you want to check it out right here. Anyway, guys, I love you so much. Happy Monday again. And I will catch you guys here in my video tomorrow.